Hello, everyone, and welcome to The Buck Stops Here. I am Catherine Murray. Well, I'm very, very pleased to bring to you our guest today. I've been trying to book him for about 5 months or so at least, and he's a very busy person because they've got international clients, institutional clients around the world wanting to hear their thoughts, wanting to understand their research as it relates to the macro picture, geopolitics, and of course, the markets and what all of this means to you. So let me bring in our guest and get right to all the topics I want to discuss today with him and get his views for you. Louis Gav is joining us. He's the founder and CEO of Gavekal Research. Louis, great to be with you. Thank you. Thank you.
Thank you so much for having me, and I'm sorry it took us so long.
That's okay. I'll take it. Louis, there's a lot of topics I want to get to today for our viewers' sake, and I want to start with the first one, front and center for everybody right now, which is what is going on in Israel and how you're assessing it with all your context in the world. There's a lot of big investment banks out there right now hosting calls in terms of what happens next, what the risk is, and does it escalate? What are your thoughts?
Um, Look, I'll look at this in terms of markets. Obviously, the human suffering is horrific. But looking at it in terms of markets, I was actually, just by pure coincidence, I was in the Middle East when all this unleashed. I was in Abu Dhabi. And one of the things that struck me was that a few days after this started, the foreign minister of Iran got on a plane and flew to Jeddah to meet with MBS. And what came out of their meeting was a pretty clear attempt to de-escalate the situation. And I think when you look at most of the regional players, whether the Egyptians, the Jordanians, even Hezbollah, it looks like most of the actors are actually don't want a full-scale war. Hamas obviously wants a full-scale war. They're the ones who launched these outrageous attacks. But beyond that, everybody's trying to de-escalate. And I think that probably explains why energy prices haven't gone through the roof and why this perhaps hasn't, as horrific an event as it's been, the markets have kind of brushed it off. Because if this isn't
Mm-hmm.
going to trigger much higher energy prices, then the reality is the impact on broader markets is going to be limited.
And Louis, from a geopolitical perspective, it's been interesting to watch the alliances and the allies unfold. And you've written about this going back well over a year ago. And it's just interesting to sit back and think about the new spheres of influence and relationships between China, Iran, and Russia. I feel like this adds more momentum to these new, call it friendships. How are you seeing that play out, and what does it mean for the markets?
Look, I agree 100% with what you just said. Before this event, we were already moving into a world that was splitting between a sort of unified West and a global South, for lack of a better word. And I think this latest event further reinforces those trends. And it's a trend where, trade in the Western world obviously remains in dollars, and a lot of the savings get redeployed into US dollars. But a lot of the growth in trade, a lot of the growth in savings isn't really occurring in the world's aging democracies. Trade today in the world is occurring where you're seeing growth in trade. It's all between emerging markets. Where you're seeing growth in savings, it's all within emerging markets as well. And in a world that's increasingly splitting between democracies and the global south, it means that more and more of the trade, more and more of the savings of the world is going to now occur in non-US dollar currencies.
Hmm. So, what do you think that means? I mean, I feel like these movements are very glacial, and so that's why probably a lot of people don't necessarily think about it day to day. Obviously, big money managers, pension funds, hedge funds do, I think. How are they reacting to your comments, like on that topic?
Well, look, I don't think it's a coincidence that over the past couple years, you've seen an absolute meltdown in U.S. Treasuries. The big development of the past few years for me is how U.S. government bonds have basically underperformed any major emerging market bond index you care to pick. This is the first time in my career that I see a Fed tightening cycle, and Indonesian bonds outperform US bonds, Brazilian bonds outperform
Hmm.
US bonds, Chinese or Indian or Chilean or Mexican, all outperforming US bonds. That's the new macro trend of the world that we live in. More and more of the world's savings are staying at home, no longer immediately being redeployed in US treasuries. It's a massive
Hmm.
change.
Hmm. I want to pick it up on the other side of the break because I'm curious in terms of those dollars staying at home. But are you also seeing governments around the world, as has been said, reported, wanting to sell U.S. treasuries because of what we have seen in terms of freezing of assets, which you've written about? We'll take a quick break. We'll be right back.